After our latest 75 basis point rate hike, those who thought we were done were disappointed to hear that the Bank of Canada isn't done yet. Right now, our target rate is at 3.25%. Big banks have adjusted their peak rate forecast upwards by 25 to 50 basis points, and the uncertainty is still out there. And more recently, our clients have been wondering whether they should stay with their variable mortgage or go with a fixed rate mortgage these days. So let's talk all about it in this video. But before I continue, don't forget to give this video a thumbs up and subscribe to our channel so you don't miss other videos like this made specifically for real estate investors in Toronto. Nowadays, a lot of variable mortgage holders are starting to feel the pinch with rising mortgage costs. And perhaps because of this, more people are wondering if they should switch to a fixed rate mortgage, which can give them more financial certainty. Take a look at this chart that shows mortgage preferences over time, and you can see that in early 2022, right before rate hikes started, variable mortgages were the most popular with 55% of people choosing them. And it's actually the highest percentage seen based on this chart that goes all the way back to 2013. And it seems like there might be an inverse relationship between interest rates and the share of variable mortgages. When rates are low, more people actually choose variable mortgages. And when rates are peaking, more people switch to fixed mortgages. And that's actually really the opposite of what they should be doing. At this point, I think we are in exceptional times and people are afraid that interest rates are going to go to a place that we've never seen since the early 90s. It's true that it can happen, but the probability is pretty low still. Yes, interest rates are still going to go up because inflation is coming in hot still, but the big banks are now expecting that we'll peak by year's end somewhere close to 4%. Our fast rising interest rates will definitely hurt our economy, and the central bank seems like they know it too. Oxford Economics thinks that because Canada's economy is so sensitive to interest rates, we will go into a recession. In fact, 78% of major economists nowadays believe that Canada will be in for a recession, and most of them believe that it's going to be somewhere in Q1 of 2023. And after this hard landing, rates will probably have to do a U-turn back down. Now, the experts think that we're peaking, but what does the overall market think? Let's head to bond yields, which reflects what the market thinks rates will go in the future. And you can see that 5-year bond yields are actually plateauing. So what this means is that future rate hikes are probably already fully priced in. Now, given all of this, let's tie it all back to fixed and variable mortgages. The big benefit of going with a fixed rate mortgage is that you definitely have more financial certainty compared to variable mortgages. On the other hand, variable mortgages are usually cheaper than fixed rates at the time that you start your mortgage. Here's an example of what might happen for variable rates to break even with fixed rates. Now, the big risk here with variable rates is that if interest rates continue to go up by a lot more than expected during your mortgage term, then you might end up actually paying more on a variable compared to a fixed rate mortgage. But if things swing the other way and rates come down faster or by more than what's currently priced in by the bond markets, then you would be better off with a variable mortgage. And so here is our always $1,000,000 question. Should you go with a fixed rate mortgage or a variable rate mortgage? First of all, I have to say that this is not financial advice, and we always recommend that you speak with your financial planner to figure out what is the best situation for you. Here are some more facts. Fixed rate mortgages are based on bond yields, and we just mentioned that the market has probably fully priced in future rate hikes, and it looks like things are plateauing. It's also driven by inflation and how our economy is doing. So if you agree with the economists and the market, then it's possible that you might be locking in peak fixed rates right now. At the end of the day, I think it still comes down to your risk tolerance level. If you want financial stability, fixed rates would be right for you. If you're looking for the best rates over the next 5 years, variable mortgages might still have the edge. We actually did a poll recently on Instagram just to ask our followers, and it seems like the majority of you still think variable is the way to go. But perhaps a hybrid might be the sweet spot for those who are looking for a bit more certainty over the next 1 to 2 years, but you still feel like things are going to get better after that. In this case, you will have more financial certainty over the next 1 to 2 years. And then after that, you do give yourself more flexibility to switch over to variable rates after that. With the end of rate hikes near, we're going to see more confidence come back to the real estate market in the coming months. And because there is less buying competition right now, this might end up being a great time to invest in real estate if you can bargain for deep discounts. If you can cash flow positive using future-proof interest rates and get 25 to 30% off peak prices, it's a great deal. Remember, high interest rates aren't forever, and when interest rates drop, you do benefit from those deep discounts, and your holding power and returns will look even better. So if you want to find out what kind of deals are out there in Toronto, we'd be happy to chat. We're a real estate sales brokerage that focuses on investing in freeholds in core Toronto, and we can help you see things more clearly and match you up with the best investment property for you. After we help you buy it, our team also provides renovations guidance, leasing, and property management if you need it. So just connect with us if you want to learn more about our services by heading to the link in the description below. Don't forget to give this video a thumbs up and look for us on Facebook, Instagram, or LinkedIn if you want to hear from us more regularly. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video. Bye.